Welcome back to Morning Markets on Friday the 14th of July. Yesterday, US producer prices provided further encouragement that inflation in the United States continues to fall. On Thursday, we reported US headline inflation fell from 4% to 3% to the end of June. Core inflation also fell from 5.3% to 4.8%, which is encouraging. It's given us greater conviction that the disinflationary trend, which we've been discussing here on Morning Markets for a number of weeks now, is well underway. It also potentially encourages central banks to potentially ease the pressure on how much they need to raise interest rates from here. Later in the day, we also received the Wholesale Producer Prices Index, which is the cost of goods sold by wholesale manufacturers. The data demonstrated a price rise on a year-over-year basis of just 0.1% and on a month-over-month basis just 0.1%. Now, this was much lower than the expected levels. Year-over-year was expected to be around 0.4 and month-over-month 0.2, so it was surprising to the downside. It was more positive than was expected. The ease in pressure which we've seen across supply chains and actually some of the slowdown in terms of consumer demand has helped moderate some of those pressures on supply chains overall and also production costs. But businesses were expressing a degree of caution around just how much they could pass on price increases to consumers on a forward-looking basis at this point in time. Labour markets in the US also remain very strong, very tight in fact, and to give you some context for that, at this point in time, we'd expect to see unemployment levels start to be taken up, and we would get a feel for that in the number of citizens who are filing for unemployment support for the first time. Rather than that number ticking up last week, it actually came down by around 12,000 US citizens to a level of 237,000 at this point in time. On balance, the debate is whether the 0.25% increase, which was expected for the July meeting, which will conclude on the 25th of this month, is required, and hence we've seen bond yields ease on the back of that. We're also in the second quarter earnings season for US earnings corporate in the United States, and yesterday we had a report from US airline carrier Delta. What they reported was record quarterly earnings and revenue, so profit and sales, and an increase in the full year expectations for 2023. Just to give you some context from this, when we had the release of COVID policies, you saw a big pickup in terms of domestic travel. Now what you're seeing in Delta is a big pickup in international travel, which is the more expensive alternative there, so there's still demand from US citizens. For context, over the quarter, domestic travel increased by 8%, but transatlantic flights increased by 65%, so demonstration of a strong consumer and hence this continuous challenge that we have and debate around the required action from the US Central Bank. Today we'll hear from some of the larger US banks as well, which will bring you up to speed on Morning Markets next week. So in summary, signs of inflation falling further in the United States and examples there of companies in the United States who are able to navigate these challenges. Thank you very much for watching, and we will look forward to bringing you up to date next week here on Morning Markets.